Welcome, ladies and gentlemen. Today is Wednesday, October 8th, currently 10:32. There's FOMC meeting minutes today at 2 p.m. I'll show you news before we head over to the charts. So FOMC meeting minutes. Let me get what the FOMC exactly stands for. But it is a meeting where the Fed speaks about current policy and sets monetary policy. So you might see maybe rates could possibly get cut on a day like today. I'm not entirely sure under these current circumstances. Government's still shut down. Market is still pushing near all-time highs, but yesterday price made or the S&P 500 and NASDAQ made all-time highs yesterday. So like I've said in other videos, this is my first year really experiencing these circumstances, and I'm just sitting on my hands, learning and understanding what really happens when these events go on. Now, some minor adjustments have been made to my strategy today. I will now be prioritizing my situation for simplicity. I got these headphones on. I'm talking to the broker right now. I need 1,000 shares of MES. I get 1,000 minis. But anyways, let's head over to the charts and let's see what's happening. So from yesterday, price made this decline. Although I had gotten off the charts anticipating this might have been either sideways or a bigger move than expected. And it was a bigger move than expected, but we need to take into consideration the fact that price did make all-time highs, if you can see here. And then after making all-time highs during New York session yesterday, price got some relief, capitulated, just fell. And then from PM session into London, you see a slight move up. But like I said, FOMC meeting minutes today, and the FOMC meeting minutes is a meeting that red folder, as you guys could see, but by red folder, it means high impact news. Therefore, either sideways or bigger moves than expected, or anything else if you've seen something different. But so market open, ES made this strong bullish candle and then came back down and then exited through this another strong bullish candle. But on NASDAQ, price was moving even higher. And NASDAQ is the leading index for today when the S&P 500 hasn't made as big of a movement. Or I guess it is really relative. But when watching price, NASDAQ had been the leading index. And NASDAQ honestly proved to be solid price action for the orb strategy, the opening range breakout, because we see price had been making this sideways slight downtrend, and then you see price starts to accumulate and break out. But what we see here is you see a solid retracement, although this is like a sledgehammer candle where it's a little bit bigger than a doji, but you can see price retraced back down, and then you have a candle closure exit, which this might have been a solid entry, but I missed that entry. and I wasn't really looking to enter on today, being FOMC meeting minutes. I was more anticipating something like a sideways movement for today, but I mean that was an attractive setup. So right now, price is still pushing higher, and I was even considering a possible entry on possibly this candle due to a rally up. So price broke structure to the upside, and then you see a a retracement to fill this imbalance, tapped into this fair value gap. But anyways, you just see prices pushing higher, continuing this overall trend to the upside. And upon FOMC later, I don't really know what to expect. Last time there had been a sweep where price had fallen, and then you see price had rallied. Let me see if I can pull that up for you to see what it looked like. Well, I guess that was when rates had been cut. So when rates had been cut, there was a strong decline into a recovery. But I'm really I feel like I'm blind and I'm sitting on my hands because I have so much to learn. So this was the recap for today. And now the current strategy that I'm working on differs from this orb strategy, this opening range breakout strategy. The strategy that I'm working on is a trend line strategy, which makes sense to me. And as I was eyeing it down, likely would have caught a movement here in would likely have caught a movement here. So the opening range breakout strategy, orb strategy, focuses on the 9:30 15-minute candle. You mark out the high and the low of that candle, so the high here and the low of that candle, and then as you can see here, and then you scale down to the 5-minute time frame and you wait for an exit, a retracement back into orb, and then you wait for another candle closure to the upside or to the towards the current trend that you're following. And this is I'm starting to find it's the commonality between a lot of strategies is you see the trend happen, you wait for a confirmation of that trend, and then you enter on that confirmation without hesitation, or you may miss the movement. For example, here, this had only really been a split moment where price had really looked like this because we wait for the 5-minute candle closure, because when you enter on a wick, price really could go either way in the infinite amount of possibilities. In the infinite possibilities, price could maybe not close in the direction that you had been hoping. So you wait for confirmation. But the current trend that I'm working on, how it differs is it's hard to really put down on Trade Evade because it's a limiting capacity for the tools that I can really use. I mean, I guess they're fine line tools, but it's easier to do on Trading View where you place the ray and then the ray extends. You have point A to point B, and then the ray extends, showing you where the current trend is pushing. And if it exits this trend, you enter, targeting where the trend is invalidated. Similar to placing your stop loss at a recent low, because if price pushes past that recent low, the trend has been invalidated, and the current setup that you had the current setup that you had has now been invalidated because you were hoping for the uptrend, but price came down and started to make a downtrend. So that is my recap for today. And how I plan to practice this new strategy that I'm trying to work in. I'm going to go on FX replay and get in some reps on market opens. FX replay is a software where you can go back to a previous date and then trade from that date, fast forward through each market open, simulating your strategy, repeating the setup, which is pretty helpful. But I find even then I've learned that the unprofitable trader mindset wants to lean in and revenge trade, or even see a bigger profit even though that number doesn't exist. But I'm working on it, working on my journey, and spoken to my dad yesterday, and he's like, well, what's the timeline for what you're doing? And I'm like, well, I actually have no idea, and I'm doing the best that I can with as much as that I know, and with the current plan that I have, I am doing as much as I can without putting least amount of pressure as possible. But even then, I feel, you feel pressure either way. So I'm doing my best, but I also feel like by accepting and understanding the pressure and realizing that any pressure is really put on myself and that it doesn't really exist other than in my own mind. Because if I had X amount of money, would I really be putting pressure on? Would I really overthink the setups that show up in front of me? I feel like maybe 1% less, and that 1% is significant. So another thing that I'm also working on is how to sit when trading, because I notice myself really lean in and watch. And does the profitable trader really lean in and need to observe like that? I don't know. I feel I'm also self-aware, but I can use that towards my advantage of 1% better. Let me fill out on the perfect trader. We got yesterday was the 7th, not the 6th. FOMC meeting minutes. at 2 p.m. today. After all-time highs yesterday, price saw relief, and then today price was recovering from that, was filling the imbalance caused from yesterday. With anticipation of FOMC and the government shutdown. Yeah. With the anticipation of FOMC, I sat on my hands. Uptrend. I don't know why these fall back down, but yeah, even down here. Why? This had been yesterday. Man, this is gonna take forever. I'm not doing that. Yeah, fuck that. All right. I need to start adding these into the columns instead of over on top of them because they keep fucking sliding around. Even if I entered on NQ, price is just falling now. And I don't see much of a, like, okay, even here, so the trend line pattern prioritizing the current trend and reacting following where the trend actually following where the trend breaks and entering with the continuation, the hopes that price will continue falling. So if price closes below this line, you would enter towards the downside, because otherwise, if price continued higher, you wouldn't enter in shorts, and it would be like this, or right now it would be like this. And since price didn't push any higher, if price did push higher, you would enter long above this line. But right now, you would enter in shorts. I mean, for ES, it works right now. I didn't miss the entry, did I? You're hoping for a retracement as well, for price to exit this, but then also come back in, come back down. But when you get further away from it after closing below, that is further confirmation to continue that trend towards the downside. But I did miss that entry, so you see on here the screenshot is still there in that cell, except for the other one, it just won't stay in there. Figure it may be best to just do it. Correct as soon as possible, but why I'm not looking to correct these is because they vary in strategy, and I'm trying to figure out what works best for me, and by analyzing prior strategies is like, I think it's mixing it up, and I don't know if that's very helpful because it's not a very accurate sample. So with that being said, price made this rally uptrend into, what would you call this now? Uptrend into accumulation to the downside. You replace the picture in there. Unless this is a rally and this was just retracement to the downside. On a day like today, I really have no idea. It would make sense though. Orders orders that had taken advantage of this increase in price likely would sell off towards a point of premium, which is towards the up. But then as people start selling, as there are orders for selling, and if price is at a premium for an uptrend, people are likely selling in hopes for price to keep falling. But you just got to follow what the strategy says. All right, y'all boys. I'm going to catch y'all boys on the next one. We'll see what happens at 2 p.m. I don't really know what could happen next, so.